We What's going on, guys? My name is Wyatt Reed, and this is the Ascend Your Success podcast. And today I get to talk to my friend Nizan Mosery, who's going to be talking to us about multifamily. And so I'm excited about this. I think you guys will be too. So grab your pad and your pen, and let's get into it. Nitsen, man, thank you so much for being here, bro.
Yeah, man, it's my pleasure, Wyatt.
Awesome, awesome. Well, hey, before we kind of get into the meat and potatoes of multifamily, tell us a little bit about yourself. Like, how long have you been investing? How'd you get into it? A little bit of all that.
Yeah, sure, absolutely. So I'm originally from New York City. I'm first generation American. My parents came over from Israel years and years ago, and I got into real estate thanks to my dad and my parents. They always, my dad always used to joke around, but kind of seriously, telling me, there's two types of people in this world: those that pay rent and those that collect. And son, you always want to collect. So it's always been in the back of my mind, and you know, I'm not a college graduate. Didn't graduate from big universities. I don't have that on my shelf and whatnot. So I always looked at something that I could do that could help me move along in life. And really, being lazy like I am, I wanted to do something that I do it once and it kept feeding me over and over again. And I kept hearing my dad's voice, collect rent, collect rent. Um, so, we all know about buying a house and putting a tenant in there, right? That's kind of something that's always floating around. But so I started doing that, you know, a long time ago. Bought a house and put a tenant in there, and I realized, whenever they would pay rent, it would be great. I'd have money to pay the expenses and whatnot, but every once in a while they wouldn't pay, and then I was like, oh man, what do I do now, right? So I got to dig into my own pocket and pay, and so forth. And in 2009, I moved back to the U.S. because of the crash and whatnot, and I started flipping houses and renovating them and wholesaling and doing all that kind of stuff. And I realized very quickly that that was coming to an end. More and more people were coming into the market and jacking up the prices and doing all that. And I realized, although I loved it, I loved renovating houses and seeing the the end product, but it was a lot of work.
Mm,
And once I sold the house, I wasn't making any money until I found another house and all that kind of stuff. And I wanted to keep that cash flow going.
yeah.
So I went and I found myself a mentor and I started learning and studying. And, I did everything that he told me not to do. I did. I kind of,
Mm.
he said, don't buy in a D neighborhood. D stands for drugs. I said, okay, I won't. I went and I bought a 4 unit property in a drug infested neighborhood. And I had drug dealers and prostitutes and pimps. And those were great. And, he said, don't buy in a D neighborhood. And I went and I bought a duplex in the south side of Chicago and in one of the worst neighborhoods. So I learned by doing everything that he told me not to do. I did. And I learned from that. But slowly, I realized that multifamily was really the way to go. And I started buying more and partnering up with people who are a lot smarter than me. And it's been an incredible ride. It's been a journey, a really wild journey. And it's amazing what passive income can do for you.
Yeah, absolutely. I 100% agree. And I'm with you on the single family rentals as well. It's like, you may end up making 250 bucks a month off of these properties, but by the end of the year, if the HVAC goes out or the water heater goes out, then there goes your cash flow for the year. Like, what do you do if you only got one house, you know?
It's
Um,
funny you should say that because that just happened to me. I just sold it. I had a property that I bought, I think in 2013. Bought it for $75,000.
mm,
I put in a tenant in there. It was paying me 2 grand a month. And then after a while, when the equity went up, I pulled some money out to buy another property. So my mortgage was around 1,200 bucks, taxes and all that kind of stuff. So I was making maybe 500 bucks a month passive, cash flow on top of after expenses. And 2 months ago, the AC went out. Boom,
mm,
5 grand. That
yeah,
was my entire profit for the entire year. So I decided to sell it. I sold it. Now I'm doing a 1031 into either a duplex and I'm going to do a short-term rental or into a multifamily property that's going to gain me that, extra cash flow. So
yeah, I
yeah,
love it.
it's you're rolling the dice.
Yeah, absolutely, 100%. So, you said a couple of things. So, when we're talking multifamily, that's a very broad spectrum, right? You have these duplexes and triplexes and quadplexes, which, I've always just kind of assumed that anything under four doors is looked at similar to single family homes, right?
Hmm.
And then you have your own up. So are there other groupings like maybe after four doors it's 4 to 20 is considered this or 20 to 100? What
Right.
how do you look at that?
Yeah, so anything under four doors, like four or under, is considered residential.
Mm,
But still, a duplex is a multifamily, right? What does
right,
multifamily mean, right? More than one family living in a property, right? I just had a client, a coaching client of mine. He just bought a duplex in Tallahassee with a storage shed that he's going to turn that into another unit. But right now, his duplex is cash flowing him $1,200 a month.
right, right.
So that's 14 grand a year passive cash flow that's coming in where he doesn't have to work for it. Now he's going to renovate that little unit and is going to bring him another, extra. So he'll probably be cash flowing around $1,800 a month, positive cash flow after expenses, which is, what is that, $20,000 a year,
Yeah.
right? Just
So what
passively.
what are
So
you focusing on, if you don't mind me asking?
what am I focusing on?
Yeah.
Yeah, so I right now personally, I'm looking at anything from like 4 units and up,
Mm,
right? So as I mentioned, there's residential and then there's commercial multifamily, right? Anything above 4 units is considered commercial multifamily, right? And what does that mean? It means that once you're going above the 5 unit, it's not based upon your credit score. It's not based upon your income. It's actually based upon the property itself. So
mm,
you can have, you know, 1,000 doors where if you're only buying a duplex, you can only have a certain amount of duplexes because it's going on your credit um, on your personal line, right? Your personal income. So I like to go, 5 units and above so that I can get as many 5 unit properties as I want. Um, and a lot of people they think, well, multifamily, how do I do that? I don't have the money to go out and buy something like that. And it's great because you can use other people's money,
mm. Yeah.
right? You can go in and you get a loan from a lender, just like you get from buying a single family home, right? You get a loan, but then you can go out and you can go out to your friends, family, other people that are what we call private money lenders that'll lend you on that property, and you can buy a property for very minimal out of pocket. You know,
Hmm.
I was actually looking at a duplex where it was so undervalued that after I fixed it up, the value after that, what we call ARV, after repaired value, once it's
Hmm.
all done and whatnot, was so high that the lender was going to loan me up to 95% of the
Wow.
purchase price and 100% of the renovation.
Mm,
Because once I was done renovating it, it was still, the value was so high that I could refinance, pull all that money out, pay off that lender, and now I just have one loan and it's there. So I was coming out with almost no money out of pocket. And if I didn't have the money, I could have went to a friend, family, colleague and say, "Hey, listen, you know what? I need 10 grand, 20 grand, and I'll pay you X amount of money and loan me that money."
yeah.
Now I'm in it with no money. And that's kind of what I'm showing my clients as well how to do, is buy these properties, with minimal to no money out of pocket.
Yeah.
And what's awesome is that you don't have to buy a 100 unit property or a 50 unit property, even a 20 unit. My coaching client at $1,200 a month. Think about it.
Yeah.
That's your cell phone. That's your utility bill. That could be a car payment, right? Your monthly car payment. So he's got 2 or 3 bills that are now paid for by this one property. And if he goes out and buys another one, all his bills are paid for,
Yeah. I love it.
right?
I love it. So let me ask you this. A lot of people that are listening are going to be newer investors. So with the newer people who've never really done deals, do you kind of push them towards 4 and under units to get them started, or can they just go out and buy a 20 unit, you know, right off the rip?
That's a great question. It all depends on the individual person, right? Some people come with a background in real estate, but never have done multifamily, right? Some people have never done real estate and they want to jump in. So depending on where you're starting at, right, is where I'll direct you. Right. I was talking to someone today who he's been a developer for the last 15 years. He's developed multifamily properties. He's developed single family communities and whatnot. So he has access to capital. He has knowledge. He has things of that nature. So, I was talking to him. I said, you could start off a little bit higher, 20, 50, 100 units, right? But then I have clients that come in and say, hey, you know what? I've never done a real estate deal in my life. I said, great. Let's start with a duplex with 2 units, 3 units, 4 units. Let's get your feet wet,
Mm,
right? Let's get them in, because think about it, right? You and I have been in real estate for a long time, and we talk about tens of thousands, hundreds of thousands of dollars, right? I was
mhm.
talking to someone the other day, and we were talking about raising, $500,000. Now think about it. Someone who's never made $500,000, right? Or they've made maybe $100,000. You're asking them to go out and raise $500,000 for a deal. It's mind blowing for them. How do I do that? Where do I go? But for them to come up and to raise, 20, 30, or even $40,000 to buy a duplex, that's more conceivable for them, right? They
Right.
can they can grasp that. So I want them to grasp and to have a tiny win, a success. Hey, look, you just closed on a duplex. That wasn't so hard, was it? Okay, great. Let's go out and buy you a 4 unit property.
Right.
Let's go out now and buy you a 10 unit property. Next thing you know, they've got a portfolio of 8, 10, 15 units, and now they don't have to worry about that cash flow. So it's all about where you're starting from, right?
Right.
But I know a lot of people that have never done a real estate deal that have jumped into a 100 unit property and they've built a team, and hey, let's go for it, right? And
Yeah.
then there are people that struggle to get into a duplex. So my job is to figure out where you're starting from and to help you move baby steps
Yeah.
along the way and get you going, right? It's all about getting into that first deal. I don't care what size it is. Let's get you accomplished. Let's get you success, and let's get you moving.
Yeah, I love that. I love that. So when you're starting from the beginning, like I've done deals before, right? Other people have done deals before. How does the marketing look different from the single family? Does that look any different, or are you utilizing the same marketing channels for single family as you are for multifamily?
Great question. Great question. And now you gotta that all depends on what type of property you're going after, right?
Mm,
So if you're going for the 5 units and under, you can get lists, you can do direct mail, because usually there's an LLC, and that LLC you can find the owner pretty quickly, right? So you can do direct mail. If you're mailing to the property, on a duplex, triplex, or a 4 unit, there's probably not going to be a property management company in between. The owner is probably going to manage that themselves, or maybe have like a maintenance person that manages it. So it's very easy to get to the owner. So you can do direct mail, you can go out and buy lists and whatnot. When you're going after the bigger properties, the 20, 40, 50 unit properties, 100 unit properties, they're usually bought through what's called a syndication model,
mm,
right? Where you're creating these different LLCs and companies and different structures and whatnot. And there's a lot of layers between the property and the actual owner. So when you're going after the bigger properties, my recommendation would be to build relationships with brokers,
mm,
because the brokers are going out there and they're going to pound the pavement. They're going to talk to the owners. They're going to build out, a property package, an offering memorandum with marketing in it and comps and what's going on in that area. And they're going to build out the financials for you and so forth. They're doing that so that you don't have to do it. So I would go out there and build relationships with the brokers if you're going to go into that higher numbered properties, right? If you're
Mhm.
looking at the smaller ones, you can definitely go out there and do the same as your single family. Get lists, send out letters, emails, you know, text messages to owners. You can definitely do that. Going out to the bigger ones, go to the brokers because they're already pounding the pavement. They know where and who to talk to.
So there are multifamily brokers that only focus on multifamily, kind of similar to
Absolutely.
your residential real estate. That's awesome, man. I like that. Um, is it harder to find those guys, or are they similar to the other brokers where you can just kind of find them on Facebook or Google or whatever?
Yep, good question. They're all over the place, man. You can Google multifamily brokers and you'll get a list of them,
Yeah.
right? And you have these huge nationwide brokers, right? Where they're throughout the country, and then you have these smaller, more localized shops that are local in that market. You want to reach out to both of them,
Mm,
right? Because depending on the size of the property that you want, depending on, you know, where you want to be, um, it'll depend on which broker you want to talk to. But yeah, you can definitely Google multifamily brokers, and they'll the localized shops, the smaller shops, and the big nationwide shops. You can go and you can create your own profile on their website, right? On their database. What exactly, what type of property, what city, where, who, what, all that. You create that, and now you'll start getting emails when they have a new listing, right? And that's one way of getting on their list. And every time, a lot of times, the good brokers, when you create your profile, you'll get a call within a week or two. And hey, Nitsan, hey Wyatt, how are you? I saw that you signed up on our portal and you're a new buyer. Hey, just want to say hi. What are you looking for? And they'll get into that conversation with you, right?
mm.
Now, if you're a newbie, right? If you're just getting started, I highly recommend getting coaching on how to talk to these brokers,
That's what I
what
was
to
going to
say
say.
to them,
Yeah.
right?
Yeah.
Because, you know, think about it. They're being bombarded by, you know, tons of people. And if, you know, they'll ask you questions, for example, what's your going in cap rate? And if you're a newbie and you're like, cap rate? Is that like
Cap
a
rate.
cap, like a hat that I got to wear? What are you talking about cap rate? I have no idea. They're
Yeah.
gonna be like, okay, you know what? Here's some of my crappy deals. Figure it out. When you've got some knowledge, come back and talk to me and whatnot. So before you blow them out of the water and you lose face with them, I suggest, you know, getting coaching, getting mentoring so that you know how to position yourself as someone who's been in the business, that you've got a team behind you, and so forth. Now, again, when you're doing the smaller deals, you don't have to worry about the cap rate. You just want to say, look, this is what I'm looking for. I've got $100,000. I got $50,000. I got 20. I'm looking to make some cash flow. What do you got? It's a lot easier,
Mhm.
right? But when you're talking to the bigger the bigger shops, or for the bigger properties, you want to sound like you know what you're talking about.
Yeah, absolutely. I 100% agree. Um, so now that we know how to kind of find the deals, how are we getting them funded? So can we, I know for under 4 units, like you can take hard money, private money. I'm sure you can use private money on both, but are the same hard money lenders, do you think, which I mean, I know it's different for everybody, but are they going to be willing to fund these bigger multifamily properties, or you think you got to find more specific multifamily hard money lenders, or is
Yeah,
that even a
fantastic.
thing?
Absolutely fantastic. So, um, hard money lenders are great. You know, you can still get hard money for bigger multifamily projects. We call them bridge loans, right? Hard money is like a bridge loan, right? So when you're doing bridge in the larger, when I'm talking larger, I'm saying, you know, 10 units and up.
Hmm.
Okay. So that's 10 units, 20, 100. When you're looking to get short term bridge financing, right? Bridge loans, that's for a project where the purchase price might be a little bit high, but and the owners haven't pushed the rents, right? Maybe they've owned it for 10, 15 years. They haven't really pushed the rents, and there's a lot of upside, right? But you can't go in and get a regular loan because a regular lender will say, you know, the income won't justify you can't pay the mortgage with the income. So what do you got to do is you got to go in with a short-term loan, right? And during that time, push the rents as high as you can and then refinance into a permanent loan.
Right.
But if you're going into a deal where the rents are already there and the price is good, and you want to go in with what's called institutional financing, right? I don't know if you've heard, right, a lot of
Mhm.
people have heard of Fannie Mae, Freddie Mac, right? They'll go in, and these are the guys that they're called permanent loans. So you go in and you'll get that loan for 5 years, 7 years, 10 years, right? And that's when your income can cover your mortgage, right? So these guys will look, and there's a ratio, right? They're looking and going, the income, the NOI, the net operating income, right? The gross income minus all of your expenses, right? That's your net income, your net operating income. That has to cover your mortgage payment by at least 1.25%.
Mm.
So let's say your mortgage is $100,000. They want to see your net operating income at $125,000,
Right.
right? So that if there's a little hiccup, you can still cover your mortgage, right? If you have some vacancies and so forth. But again, you can still go in with short-term financing so that you push that. I mean, short-term financing is anywhere between 12 months to 24 months. You're right. They're going to give you maybe 65, 70% loan to
Mhm.
value. Okay. And they'll give you some um, cash for the renovations as well, just like on a single family. Right. And then you've got 12 to 24 months to do your renovations, to push those rents up, and then get in a permanent loan.
Mm.
Right. So yeah, you can definitely do that, right? I don't think the bridge lenders or the hard money lenders for single family are the same lenders for the bigger multifamilies, because you're talking, 5 million, 2 million, 3 million, right? Rather than 100,000 or 500,000, right?
Right.
But there are short-term hard money lenders for multifamily properties.
Yeah, absolutely. And I think it's cool too, because this is something that I recently learned about the storage facilities. And I say recently, in the past 3 years, we were getting into storage and stuff like that. And I remember being at a meeting, like a mastermind, and I was trying to buy storage facilities and stuff like that, and they were like, yeah, and then we made this $200,000 assignment on this storage facility, and I was like, time out. I've had my blinders on this entire time because I'm thinking I want these big properties to hold and cash flow. And I'm like, you
Right.
can wholesale them, you can flip them, you can do anything else a single family home can do, but at a much larger scale with the multifamily. Have you focused on that? Have you done those things, or are you just mainly focused on the passive income?
Yeah, that's a good one. You can definitely like, so again, the duplexes, 4 units, you can definitely flip. Even a 10 unit you can flip. The thing is with larger multifamily properties is that you have a a, a deadline, you have a timeline, right? Just like in single family, you've got 30 days to do your due diligence, and then maybe another 30 days after that to close. And when you're talking either with bridge loan, hard money, or permanent lending, it takes the lender anywhere between 45 to 60 days to get the debt in place.
Mm,
So if you're looking to flip a multifamily property, right, a bigger property, you got to have the buyers immediately
mm,
ready to go as soon as you put that property under contract, because you know when you've got a bigger property, you've got to do what's called a financial audit, right? So let's say you've got a 50 unit property, you got to go through all 50 leases, you got to talk to the tenants, you got to check the finances, the financials, make sure the income and expenses are right. Then you've got to do your physical due diligence, right? In a single family or a duplex, right? 2 units or four, it's very quick. It could be done in a day.
right.
But imagine doing a door by door inspection on a 100 unit property. It's going
Yeah.
to take you about a week, right? To do that, you're going to have teams of people, and you got to go into every unit. Then the inspector has to put together the report. It'll take a couple of days and so forth. And then you've got to get an appraiser to come out and do the appraisal, and then the survey, and right, and all these different things. And then so as you're doing that, the next buyer has to come up and do that as well. And then they're probably, if let's say they got to come up with, a million, 2 million, $5 million in equity, they're usually going to have to go and raise that capital from their investors. And
Right.
that takes time. So if you put a property into contract and now you're 2 weeks into it, that just means that your end buyer has less time to do their work.
Mm.
So you can definitely flip it. I mean, I went and my first larger multifamily, which was 27 units. I went and I put that puppy under contract. I negotiated it from $500,000. I negotiated them down to 400. Um, we went in, and the day our money went non-refundable, we found out that the subsidy on the property was disappearing, so the income was zero. So we were like, "Hey guys, that's, you guys didn't tell us that." So after we got it all straightened out and whatnot, I found another buyer and I flipped them the contract. I made 80 grand on that deal.
Wow.
So you can do that. Absolutely. Now the thing with that is, right, you got to look at both scenarios. You flipped it, you made $80,000. Okay, you're going to get taxed at the highest tax level on that money because you were just acting as a dealer, right? There's nothing there. When you hold a property, now you can do what's called a cost segregation report.
Mm.
That's an engineering report, right? It talks about depreciation. The windows depreciate fast at a certain time point, the flooring, the walls, the wiring. You do this engineering report, now you can depreciate everything within the first year.
Oh,
So if
wow.
you're making passive income, let's say you made $50,000 of passive income this past year and you bought a property and there's $100,000 depreciation in year one. Why wait for 27 years when you can take it in year one? Now you got that depreciation put against your income, and now you're not paying any taxes on that.
Mm. I
You
love that.
can't do that when you're flipping,
Right. Yeah.
right? And then there's long-term capital gains, short-term capital gains. There's all of that stuff. So I enjoy the passive cash flow that we get,
Mm.
right? You buy it once, you hold it for many years, you get that depreciation, and now you're getting the cash flow. And you can
Yeah.
be on the beach somewhere in Hawaii, Honolulu, and just enjoy yourself.
Yeah, I see some of them pictures you take, man. That's for sure. No, I'm 100% in agreement with you. I think the more I sit and think about like the whole flipping and the wholesaling, obviously those are great methods to be able to create capital and things like that. But the more I look at it and think about it, the more I'm like, man, I've just got to chase after that next deal and chase after that next deal. And I mean, once I had the cash flow in place to not have to worry about that, you couldn't tell me anything. You
Yep.
can't get me to do things that I don't want to do anymore, right? And so I think that's so very important, and it needs to be in the forefront of anybody's mind who's wanting to get into real estate. I believe so. We're coming up on time now. I could probably talk to you about this all day.
Yeah,
so,
absolutely,
but
man.
but
But why? Let me tell you this. With wholesalers, right? What's great about wholesaling is that you guys are wholesaling, you're getting chunks of money coming in at a time. Take that money, take half of it, put it aside. And when you've got a big chunk of money, go out and buy a multifamily with it. Go and invest with someone who's got a deal so that you can get that cash flow, you can get that depreciation, you can start building it up. And next thing you got a duplex here, a 4 unit there, another triplex over here. Now you've got 10 units and now you've got cash flow coming in,
yeah.
right? That's the best way to do it.
That's it. That's for sure. Well, before we get off here, knowing what you know now, what advice would you give somebody that's just getting started, that's trying to figure out what they want to do as far as, single family, multifamily, they just don't know. What kind of advice would you give them?
I would say start off with what are your goals, right? What are you looking to accomplish, right? Multifamily is a great way to create passive income. It's a great way to buy back your time, right? I would suggest go out, figure out what your expenses are. Okay, figure out, when I start with my coaching clients, we take inventory, right? Like, like when you're in a store, we got 5 of this, we got 10 of these, we're missing this, we're missing this. Take inventory. What do you have? I got time, I've got contacts. I don't have time. I don't have contacts. I've got some money put on the side. figure out what you have and what you don't have and what you need. Then figure out what your expenses are on a monthly basis.
Mm.
Okay. And then start going out and buying properties that can help replace that expense, right? So I've got $2,000 of expenses. Okay, that's food, that's my electric bill, my water bill, my cell phone, right? Whatever, and $2,000 a month is probably a single person living by themselves in those, in a tiny
Right.
shack, right? But I'm just making up numbers, right? And then go out and find properties that you can buy a duplex that'll give you $500. Like my coaching client, he just went out and he just created $1,200 of passive income, right? And you can continue doing that. I'll say this, don't quit your job until you've created that income through real estate that can match your income on a passive level, right? Don't do that, because then you're just stressing yourself out. And when you're stressing yourself out, that's when accidents, that's when mistakes happen, because now you've got to find a deal. You're like, dude, I need money. I got, oh my God, oh my God, oh my God. You're in that crazy mode, and you're going to make a mistake. You're going to buy a property because you have to, not because it's the right one to buy.
Right.
Right. So that's what I do with my clients. Figure out where you're at, what you want to do, what is your goal. Okay. Then create action steps that you can do on a daily basis that will get you to where you want to go. Don't quit your day job yet. Right. Make that a goal. Say, all right, you know what? In a year, I want to quit. Right. And so what do I have to do to make that happen?
Yeah.
Right. I need $5,000 a month. Okay, great. How can I do that? If I buy duplexes or maybe 10 units, then, I don't have that money. Where am I going to find that money? Well, let me go out and start talking to people, right? Private money, hard money. Let me talk to my friends and family. Let me share with them what I'm doing and how I'm doing it, right? And that's how I got my 27 unit. When I first got started, I was flipping houses. All my hard money lenders, everybody I knew, they knew me as a single family guy. But I went out and I told them, hey, this is what I'm doing. I'm getting into multifamily. If you know anybody who's selling a property, if you know anybody who's looking to invest, who's tired of stock markets, crypto, whatever it is, if they got a 401k or an IRA that they want to put in and have that money start generating more money passively, or if they got an insurance policy and they want to pull it out and use it and bring it back, whatever it is, let me know.
Right.
Right. So I would say figure out where you are, where you want to go, and start taking baby steps, man. Take
Yeah.
baby steps.
Yeah, and it's so important too also to have a coach, to have somebody that's gonna walk you through that, step you through that. You're gonna run into things that you just have no clue how to do, or they're gonna say something like cap rate, and you're gonna be like, I don't know what that means. Let me Google it, and then you even still you're not gonna know exactly what to say back to them. So
Right.
I mean, we're both in coaching. We both have coaches. So we're not telling anybody to do anything we're not doing ourselves, right? And
That's right.
so you should definitely do that because it's going to kickstart you. It's going to get you there even faster than what it could do on your own. Um,
Absolutely.
so how
Absolutely.
can
Having a coach is huge, And we look at all the star athletes, the musicians, the actors, everyone, right? We're not born superstars, right? Superstars are made, right? They take your talents and they tweak it. But a coach, you know, when you're out there and we all make mistakes, right? That's how we learn, right? A coach is gonna do their best to keep you out of making serious mistakes,
right,
right? They're gonna help you, with your track record, with your credibility. They're gonna be a sounding board, right? They're gonna hold you accountable for what you said you're gonna do. I think having a coach is the best. I just like you said, we both have multiple coaches.
right, absolutely. Well, how can people get a hold of you? How can they find you and talk to you about getting into multifamily?
Yeah, no, great. I appreciate that. Thank you. So you can go to multifamilyinc.com. That's multifamilyinc.com. Fill out the application. I read every application myself. Um, my phone number is right there on the bottom of the screen. It's 561-212-7247. Reach out to me. Let's have a conversation, figure out where you want to go. And, I'd love to help everyone and anyone that I can. That's one of the reasons why I got into multifamily, into coaching, is to help people,
Yeah,
is to really help
absolutely.
people. So yeah,
I love it, man.
multifamilyinc.com.
You can tell you've been doing this for a minute because that's pretty much my outro as well. So if you want to get into multifamily, holler at Nitsen because I can't help you out on that. But if you are looking before I outro, dude, thank you so much for coming in and sharing. And we're gonna have to do a part two for sure because there's so much more to get into.
Yeah, man. Thank you. I appreciate it, man. Thank you.
Awesome. Well, look, if you're looking to get into single family homes and seller financing, creative financing, or whatever, you just heard something that you're very interested in and you want some more information, go to ascendyoursuccess.com. Like Nitsen said, I look at all of those too, and I'll call you personally and we can talk about it. And whether you're in or you're out, we'll see you on the next one. All right, that's it. Let me see.